For more on buybacks, with markets at record highs and the sectors where investors should expect to see increased announcements, we have two people here. We got Nancy Tengler, Lafler Tengler Chief Investment Officer, and we also have joining us on the CNBC Newsline, Paul Hickey, Bespoke Investment Group co-founder. You know what, Nancy, we're going to start things off with you, if you don't mind. Buybacks. Are there any particular sectors we should look at? And is there any common theme kind of threading together the companies that are looking to do these buybacks?
Yeah, Frank, thanks so much for having me. Listen, what we've been seeing is that CEO confidence is at historic highs, cash on the balance sheet super strong, and then you've got this significant amount of unused credit that CEOs have access to. So we just saw Apple issue a 40-year bond and use it for capital allocation. And we've been writing about it, I know others have too, that this has provided a floor under the market, which is why we haven't seen a major correction yet this year. It's been kind of rotating through sectors. So I think this last earnings season, what we saw were a lot of energy companies announcing buybacks and dividend increases in tandem, and that's actually what I prefer to see. But in terms of sector focus, I'll leave that to my my friend and other guest, Mr. Hickey, because that's the area where I think Bespoke really digs in and does great work.
So, Paul, going over to you, there's some companies out there, some big name companies that are, pretty in favor of buybacks, I should say. We're talking about a Home Depot, an Apple, a Microsoft, even a JP Morgan. What kind of impact does that have on those companies, and what kind of impact does that have on the broader market?
Yeah, so hi. So when we look at buybacks, I mean, you tend to see two different, you like to distinguish the buybacks, whether it's company, funding the buyback with debt or using cash, or the company, whether the buyback is actually decreasing share count, or if it's just that, offsetting the dilutive impact of stock options. You often do see that in the tech sector, and you saw it years ago. You would frequently see that the buybacks wouldn't even be enough to offset the impact of stock options. So, but as you mentioned, Frank, stocks like Home Depot, Apple, Microsoft, JP Morgan, and Walmart, over the last 10 years, they've seen their share counts because of buybacks decline from anywhere from 10% to 35% over the last 10 years. So those are companies where the buybacks are really making a difference. And then as, with respect to individual sectors, it was touched on earlier in the lead up to the segment. I think Josh mentioned Howard Silverblatt from S&P discussing it. Financials. Financials have a lot of cash, and the financial crisis was over a decade now, so the regulators are starting to loosen their grip, and the companies and the banks are going to be using that money increasingly to increase returns to shareholders. And as Nancy mentioned, companies will either do it through buybacks or stock dividends, or a combination of the two. But you're definitely seeing the uptick in buybacks, and we expect to see that going forward in the financial sector.